I think today is going to be a great example of investing in what you. I do a lot of grilling and smoking food outside, so this is definitely going to be a company that I'm familiar with. And while I'm a little upset that Warren Buffett decided to purchase an energy corporation or an energy company instead of this stock, I still believe it's a great stock to buy. So let's take a look here at McCormick. As I mentioned in the beginning, I'm a big fan in investing in what you know. The reason being is just because it makes it a little bit easier to follow along with if it's something you're interested in or if it's a product that you really like. So if this is something you're new to with this whole researching stocks and trying to figure out what's a good investment, I always just say it's a great place to start with investing in something you already use and know. Again, it's just going to make it more enjoyable for you to follow along with if you already know the business and don't have to figure out the industry, their competitors, and all of that, as well as trying to figure out how to study the stock itself. Now, full disclosure here, this is a stock that I've owned, but I have owned it for a few years and don't plan on selling it anytime soon because it has done very well for me. Also, as I mentioned last week, I'm trying to transition this portfolio into a little bit more of a defensive investment. So I think that this is going to be a great opportunity to include something that's a little bit more defensive and less volatile than some of the other investments we have in the portfolio. But we'll go into more detail a little bit later about why I like McCormick as an investment. So McCormick is actually going to be the oldest stock that we've taken a look at so far. And yes, that is correct. McCormick is older than 3M. It was started in 1889, so it's been around for quite some time. And if you're not familiar with them already, McCormick makes spices. So in the grocery store, your paprikas, your pre-made spices, salt, pepper, garlic powder, all that good stuff. They are probably a brand, again, another one. Even if you didn't know you had a McCormick product, you probably already have one in your kitchen. Some of the pretty common items directly from McCormick, though, that you might have used before could be things like their Montreal steak seasoning, their taco seasoning, or those Grill Mate packets, those things that you just add vinegar, olive oil, and water and then use it as a steak marinade. Those are the ones that you've probably seen the McCormick name on, but they have some other brands that I'm sure you'll recognize as well. Some of those are Lawry's, Old Bay, Stubbs, French's, and Frank's. So they have some pretty recognizable names when it comes to, I guess, culinary needs or, the basic items you need in your kitchen, like a hot sauce or a mustard or a barbecue sauce or seasoned salt. So these are all brands that are pretty common and have that brand recognition. And during this, we have seen an increase in their consumer sales. Now, they do have a small portion in commercial sales or what they call it's flavor solutions. But it is worth noting that the consumer direct-to-consumer sales makes up 75% of their business, and everything else is only about 25% of the business. So the biggest portion is the one that we're most interested in, which is your local grocery store, buying it from there. And that's what we've been seeing increase. Now, I should just say that we did see the commercial side take a little bit of a dip during the first quarter of this year, but during the second quarter, as restaurants slowly start to reopen again, that is starting to get back on track, and those sales have actually been increasing as well compared to the previous quarter. So while a small portion of the business took a little bit of a hit, the biggest portion has been doing fine, and now that small portion is also starting to recover. And we're not going to try to predict the future here or anything like that. But if I had to guess, similarly to Peloton, where people aren't necessarily going to jump right back into the gym just because they can, I think the same thing is going to happen with restaurants. I don't think people are going to just go right out to eat as soon as they can because they can. I think maybe some people have learned that they actually enjoy cooking, or they're just going to play it safe and stay home for a little bit longer and continue making meals on their own. And I think McCormick will be able to capitalize on that in the long run. And to kind of piggyback off that as well, you've heard me say in the past that no recessions are the same, and I still believe in that. But that said, consumer behavior does have similarities during any kind of economic downturn. And one of the first things that people do cut is going out to eat at restaurants. And so even if this is something that you buy, assuming that there's going to be a recession for the coronavirus, or if you think that there's going to be a recession in the future, that is still going to be something that McCormick has an advantage of, because again, if people aren't going out to eat, they're staying at home making their meals, and they're going to be looking for those flavors, seasonings, what have you, probably more frequently than they would if they can go out to eat as frequently as they would like to. So this is, I don't want to call it a recession-proof stock. Anything can happen, but this is one that, again, is going to have a little bit more of an advantage over other companies should there be any kind of economic downturn or, a cycle headed in the wrong direction. Another thing I like, and it's something actually the CEO pointed out during an interview with Jim Cramer, is that people don't stock up on spices like they do with toilet paper. At the start of this thing, we all saw that the toilet paper and paper towel sections were completely wiped, but you were still able to buy French's mustard. That's never really been an issue. And basically what that means is while it's not something that people are going to stock up on, meaning that the average sales volume or dollar amount of sales isn't going to be that high, it is going to be a little bit on the smaller side, it does mean that it's going to have more frequent sales. So not a subscription service, or not a guaranteed source of recurring revenue, but if people are buying, let's call it spices once a month, that means each month they have revenue that they're going to have reoccurring. Where if people were stocking up on it, they might be buying it once every 3 months. And with it being once every 3 months, that's not as consistent as a source of revenue, which could hurt balance sheets and just ultimately show a negative performance. So I think it's a good thing too that people buy these in small doses, but they buy them frequently. Also, for being a spice company, McCormick has done a really good job with engaging in their consumers through social media. Obviously, a lot of that is going to be through recipes, but they do have apparently TikTok videos. They have their own Spotify station. They have Pinterest boards, Facebook boards, YouTube videos, you name it. So they've given resources for people to learn how to use their products. And I know another thing, this was especially true for me when I started to get into cooking food, is I never really liked to stray away from the recipe. Of course, now I do. But when I first started, I followed everything to a T. So if it said, an example would be if I bought Stubbs barbecue sauce and it had on the bottle like a recipe for chicken, barbecue chicken. Well, I would read that recipe, and if it said use McCormick, 3 tablespoons of McCormick's whatever seasoning, then I would also pick up McCormick's whatever seasoning because I wanted to match the recipe as best I could. As you get more into cooking, you also learn like salts have different sodium content and all that stuff. So I know a lot of people don't want to stray away from that recipe. And so by creating these video series or having these recipes listed on their products themselves is also going to help just drive sales because consumers are going to want to match that recipe to the best of their ability. You can argue black pepper is black pepper, but if the bottle says McCormick black pepper, you might look for McCormick black pepper before alternative options. And I think one last thing that I really like about McCormick is that they seem to be handling their inventory very well. If you go onto the site mccormick.com/discontinued, you could see a whole list of products that they don't sell anymore or just no longer produce. Now, it's a weird thing to throw in at this point, but it's worth mentioning because this is an item that has a shelf life. It's not like this mouse. That's not going to expire anytime soon. Where a seasoning does have a certain amount of time that it can sit on the shelf before it does expire. And so I think that's going to be very smart of them to manage that inventory well, because if they have an underperformer that's just not selling the way it should be, that's expensive for them because it takes up the real estate in the grocery store for them to put that product there, as well as it's just more expensive to produce a bunch of different products, especially if they're not being used. So with a company like McCormick, and we'll talk more about their liquidity later, it's just important to see that great to see that they're managing their inventory well and are very able or pretty quick to pull the trigger on an item that just doesn't sell that well. All right, and so we can run through these numbers real quick. This week, unfortunately, I don't have a free cash flow to the firm analysis that I do using the discounted cash flow. Again, trying to stray away from that because I am going to be using more of a qualitative analysis than a quantitative analysis. There's enough people doing quants out there, so I like to be a little bit different, which is why I'm so into this qualitative analysis. But again, numbers are important and they really do paint the picture. So we're not going to predict anything, but we do want to understand how they are financially. With the PE ratio being just shy of 35 times earnings, that does mean they're trading at a little bit of a premium, but again, not something I'm too concerned about. If that was something like a PE ratio of 70, that would be more concerning and maybe something we'd want to stay away from. But I'm comfortable with this being at that slight premium. That also makes sense why Warren Buffett probably did not buy this stock, depending on when he bought Dominion. But I know that he's a value investor, so having that PE ratio over 30 is probably one of the bigger reasons why it's not in Berkshire Hathaway. Now, their dividend is fairly low. Now, they are a dividend aristocrat, so they have been increasing their dividend for quite some time. I forget the exact amount of time that they've been able to increase their dividend. It's not the best one, but I think when you combine a consistent dividend with a investment that experiences very minimal volatility, you should have a good opportunity to understand that this is a defensive investment. So again, this is what we're looking to add. So I'm okay with the low dividend payment, given that it is a consistent dividend paid out quarterly every year and does increase each year, but also it doesn't experience the same volatility that other investments might, like a Verizon. Of course, we are going to have to address the elephant in the room here, which is their current ratio. Given that it's 1.02, I thought that was very low for a company like McCormick. Now, that being said, it does make more sense why the dividend is relatively low, and that's because they don't have as much cash compared or assets compared to their liabilities. So that explains the low dividend payout, and admittedly, with a company that's been around for 130 years or something like that, as well as having a market cap of about 25 billion, I don't see McCormick having any issues raising money if they needed to. So not something I'm very concerned about. It was interesting to see, and at first I was a little bit more concerned about it. But as I looked into it and kind of understood this is a well-established company, they have obviously a need and can support themselves well during economic downturns and have a track record of doing so, they shouldn't have issues raising cash. And as long as this dividend doesn't put them overboard, again, I would rather see a company cut back on their dividend than stretch themselves too thin. So as long as they're okay with raising cash and they don't have to stretch themselves thin to remain in business and continue paying that dividend, I think that this is going to be a great company worth adding to the portfolio. So sure, this is going to come across as no surprise, but we're going to add this one to the portfolio. This will be our 16th investment that we've done. Can't believe we've been doing this for 16 weeks already, but that's super exciting. So let me add it to the portfolio, and I'll be right back to let you know when that's done, as well as just a quick review of how we've been doing since last week. Okay, so I was able to add McCormick to the portfolio. I got 10 shares for around $194. Came out to just shy of $2,000 for a total investment so far. And as I've mentioned in the past, sometimes when a stock I feel like is a little high in their price, I like to break the purchase down into 3 separate purchases over time. In case there is the chance with a dip, we want to make sure that we have money left over to buy the dip with these investments, but also we don't want to miss out on any performance. So we bought 10 shares at around 194, and I have to address the fact that their market high recently in the past year has been 196, which might be record high. I'd have to double check on that. But that is a very high price, and it's very close to the high price. So I didn't feel comfortable with putting the entire investment that I would like to in there. So again, I'll monitor this in the background. If we see a good opportunity, we might buy the remaining 20 shares I plan on purchasing. If it's continually increasing, we might pick up shares 5 at a time. But I'll keep you updated throughout that as we move forward. But just taking a quick look here at the portfolio, we're up over $7,300, which is great to see. Obviously, Peloton and Shopify have been really leading that growth, as well as Adobe has contributed as well pretty significantly to the gains we have in this account. Oddly, the biggest loser right now that we have is 3M. I'm a little surprised to see that, not going to lie. But similarly to how we saw Walmart kind of take a while for it to pick off, and now that one's over $260 in gains for us. I'm okay with 3M taking its time to get back up to normal. And again, it's not a company I see going anywhere anytime soon. Sorry, my microphone just cut off, so not sure where I left off there, but I was getting down a rabbit hole anyway, so we'll just let that one go. So we now have McCormick in the portfolio, probably overdue for a maintenance Monday, so I'll probably be doing that sometime soon, just reviewing the positions. But yeah, hope you guys enjoyed this video. Just want to say sorry for yesterday's video. I know I made some mistakes with the editing and publishing of that, so might have seen some awkward pauses in there. I apologize. But hopefully you guys didn't mind. And yeah, I guess that's really all I have to say for today. So I hope you enjoyed this video. If you have any questions or if you have a suggestion of a stock you would like for me to review, please leave that in the comments section down below. If you enjoyed this video, I'd really appreciate it if you gave it a thumbs up. And if you've watched a few of these and you like what we're doing over here, I just ask that you consider subscribing. Well, with that being said, you could be anywhere in the world and you're right here with me, and I really appreciate that. So thank you so much for taking the time out of your day to watch this video, but I will let you go ahead and enjoy the rest of your day, and I'll see you next time.